Yeah, good morning, everyone. So yesterday was US market was more of a flattish, but futures are lower, mainly on account of a few of the large company. Uh, this Meta in aftermarket is down by almost around 50%. Uh, that is because of the poor guidance, though the result was okay. IBM result was below expectation, so that is also down by around 8%. So we are seeing some softness in the corporate results of these IT majors, and that is putting some pressures on the overall market. Asian market, Japan is indicating some softness, mainly on account of in expectations of some outcome from the central bank meeting, which may have some indications for the futures. But other markets are comparatively positive. Overall, in commodity also, we are seeing some positive trend, though the oil is flattish from last yesterday same time. But oil and steel are up by around iron ore is up by around 2% and steel is up by around 0.5%. We are seeing some up move in dollar index, and that is putting some pressure on the some Asian market as well. So overall, seems like we may be seeing some marginal profit booking or sideway movement in the today's trade. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, I will be dealing with the technical view on the Nifty and the Bank Nifty. Yesterday, we have seen that the Nifty has managed to take a support of 20 days moving average, which comes to at around 22,360 level, maintain a positive closing above the same, which gives some sort of a relief sign. Today, the market is likely to open on a slightly negative note, and we're likely to witness some sideways momentum during a day. Going ahead, 22,500 will act as a crucial resistance level. If Nifty manages to surpass that level, then only we can witness some good momentum towards at least 22,570 to 22,600 levels on the higher side. Where on lower side, as of now, the immediate support is placed at 22,370. Any move below that level will extend or attract some profit booking, which might take a Nifty towards 22,270 to 22,170 levels on the downside. Coming towards the Bank Nifty, yesterday we have seen a very flattish trading session on the Bank Nifty front also, but it managed to maintain a closing above 48,000 psychological mark. Now today we are likely to keep an eye on the Bank Nifty whether it sustains about 28,000 levels or not. If it fails to maintain positive closing about the same, then we are likely to witness some sort of a profit booking into the Bank Nifty, which might take a downside towards 47,800 to 47,600 levels on the lower side. Whereas on the high side, as of now, the immediate resistance is placed at 48,300 and 48,500 levels on the higher sides. Coming towards the Fin Nifty, the resistance is placed at 21,520, 21,580 levels on the high side, whereas the support is placed at around 21,360, 21,270 levels. So the overall view is a bit cautious on the Nifty and the Bank Nifty. Let's see whether it holds the support or the resistance levels, and accordingly, we will initiate a call. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, basically, more or less the data is the same. Importantly, we are seeing the call built up at 20 to 500 increasing. As I said even yesterday, 20 to 500 is a resistance area with calls rising there. So we might see some sort of selling pressure from those levels, which is what we might probably see today. Even yesterday from the same level, some selling came in. 22,000 is a good support area now, and a considerable amount of put built up is seen there. So yeah, all in all, we should remain on the sidelines for today, with nothing much expected. But the only thing is the VIX. The VIX at around 10.2, 10.3 levels. That does suggest that people who had built in the fear, uh, they have actually closed positions on the short side, which is actually not a very good sign in terms of in the next 1 month or so. We will see slowly and steadily the VIX move up, and the only way the VIX will move up is some drastic movements on either direction, mostly on the downward side as well. So yeah, be ready for the same. Keep strict stop losses. From the stock specific front, again, we saw metals doing well yesterday, and some of the stocks gave price volume breakouts from a longer term perspective as well, and open interest wise as well, we are seeing good built up. So, SAIL, NMDC, National Aluminium, and Tata Steel and Hindalco, these are the stocks which can do very well going forward. So, look out for the same. But always remember to keep good stop losses, strict stop losses. They can give you a good, decent 5 to 10% returns from current levels. Yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Yesterday, RBI had barred Kotak Mahindra Bank from onboarding fresh customers via online mobile banking and also asked it to stop issuing fresh credit cards. RBI's decision was triggered by significant deficiencies and non-compliances which it observed in the years 2022 and 23. The bank's core banking system and digital channels have experienced frequent and significant outages, with the most recent one which happened on 15th of April, which caused severe inconvenience to customers. So hence this action has been taken. Now, what will be the impact on business? We expect somewhere in the region of 10 to 14% could be the impact until the time the ban is lifted again. But this is going to be temporary in nature, and so we don't see similar kind of carnage in the stock price. 80 to 90% of new personal loans, credit cards, business loans, and fixed deposits are opened digitally. Credit cards portfolio constitutes 4% of advances, and so on the profit side, we expect maybe around high single digit kind of impact. Deposits opened via 811 contribute to 8% of total deposits. This incident would adversely impact growth, NIM, fee income, and OPEX also, because temporarily at least bank will look at to get new business, it will look at opening more branches. So negative for Kotak. Axis Bank result is marginally above expectation on the back of controlled OPEX and higher non-interest income. Advances grew 3.5% sequentially, 14% year on year. Deposit growth was higher at 6% sequentially, which is a positive amid tight liquidity conditions. Deposit is likely to grow faster than loans in FY25 and bring down the CD ratio further from 90% levels. NIM expanded 5 basis points to 4.06%, whereas expectation was that it may decline slightly. OPEX growth was at a 4-quarter low, although still elevated at 25% year on year. And credit cost came at 0.5% versus a sequential 0.4%. Adjusting for excess trading income, even then the profit would have been 5% higher than estimates. Slippage has been steadily falling since many quarters. It was at 1.4% against 1.6% in December. We remain positive on Axis Bank. DCB Bank result is above expectation due to decline in credit cost. Credit cost came at just 20 basis points against December quarter's 40 basis points and last year 60 basis points. Advances growth was 5% sequentially, 19% year on year. NIM pleasantly surprised with expansion to 3.62% against December quarter's 3.48%. OPEX was stable, which led to profit before provisioning growing by 11% sequentially. And profits came at 156 crore against expectation of 132 crores and December quarter's 127 crores. Asset quality was under control with GNPA and net NPA both declining by almost 40 basis points each. We are positive on DCB Bank. AU Small Finance Bank result is marginally above expectation on the back of lower credit cost. Advances grew 9% sequentially, 25% year on year. However, NIM declined by 40 basis points sequentially to 5.1%. As a result, NII and profit before provisioning were flat quarter on quarter. Credit cost came at 70 basis points against previous quarter 90 basis points, which resulted in profit coming slightly above estimates and growing by 15% sequentially. Slippage was down to 1.6% against December quarter's 2.4%. And again, slippage over here is at multi-quarter lows. So decent results from AU. We remain positive. Equitas Small Finance Bank result was in line despite decent growth in AUM of 5% sequentially, 23% year on year, as NIM declined by 20 basis points to 8.2%. Sequentially, NII and profits were flat. Slippage continued to remain high. It was at 4.1%. Even excluding one-off items, it was at 3.7%, which is still high in comparison to last year also and even sequentially. That's why we are neutral on Equitas. Mass Financial result is in line with expectation. AUM grew by 5% sequentially, 25% year on year. Broadly, all P&L items were, they increased in line with AUM. Asset quality has been stable. We remain positive. Nippon Life Asset Management result is in line with expectation. On sequential basis, AUM grew by 14%, whereas industry growth for AUM was just 10%. So it has gained market share. Revenue and EBITDA grew by 11% and 12% in line with estimates. Market share in total AUM is now at 8% against December quarter 7.7%. And last year it was 7.2%. So good results from Nippon Life. We remain positive. Thank you.
Good morning. Hindustan Unilever Limited has posted the results, and result was marginally below expectations. Volume reported at 2% versus the expectation of 2.6%. On a consolidated level, revenue grew flat at rupees 15,210 crore. EBITDA margin reported at 23.2% versus the expectation of 23.7%. If we look at the segment-wise performance, Home Care has delivered mid-single-digit volume growth with 1% growth in value terms. And over the last 2 years, it has observed double-digit growth. Beauty and Personal Care flat. It has seen flat volume growth with 2% degrowth in value terms. And Foods and Refreshment segment has seen the flat volume growth with 4% sales growth. in Hindustan Unilever, there are 19 brands which are delivering more than rupees 1,000 crore in terms of revenue, and there are 3 brands which are Boost, Sunsilk, and Vaseline, which are now moving towards rupees 1,000 crore brands club. In the con call yesterday, the management emphasized its focus is more on gross margin improvement. During the quarter, gross margin was up by 350 basis points on a YY basis at 51.3%, which can be deployed in the advertisement and promotional activities and investment in product innovation to drive the further growth. During the quarter, demand trends were similar to quarter 3. The management expects gradual recovery in rural areas, which has seen challenges in the past few quarters. The growth will be led by favorable weather for monsoon and also with the improved macro indicators. Also, current deflation in selected product realization may result positive for FMCG companies. However, price increase is less likely to play a major role in FY25, as it expects a marginal increase in prices in the second half, if possible. The stock is trading at 40.8 times to FY26 EPS, and our outlook is long-term positive on the stock. In addition to this, Tata Consumer also held the con call yesterday. Yesterday, we have seen the stock was almost down by 6%, which was on account of lower than expected volume growth in quarter 4, especially in India beverages business, which has seen a flat growth with 3% growth in value terms. Also, operating margin improvement was largely on account of non-branded business. In the con call, the management highlighted company's tea market share has been stable on sequential basis, and it has lost market share of 30 basis points in terms of volume and 50 basis points in terms of MAT basis on a yearly basis according to Nielsen data. However, the management awaits for competitive numbers as it strongly believes that there is no market share loss. Also, EBITDA margin is expected to improve from current level of 15.3% going forward. And the recent acquisition of Capital Foods and Organic India are cash accretive from FY25 and EPS accretive from FY26 onwards. In addition to this, India growth business, which contributes currently 30% of India business, including the acquisitions, and those are expected to grow at 30%. Overall, the management is positive across segments. This is on account of increase in the number of outlets during FY24, which has seen the overall 50% growth. Also, innovation to sales ratio has improved at 20%, and overall capacity and distribution is also augmented. Thus, we are positive on the company at this level, and that's it. Thank you.
Good morning. Yesterday, LTI Mindtree reported its numbers, and they were below expectations, wherein the revenues were down 1.3% on a constant currency basis, Q1Q, and were down below the expectations of the street. This was mainly due to the delays and ramp downs which happened in the BFS, a couple of BFSI clients, wherein 2 of the projects got cancelled, and it impacted the revenues by 80 bips. Q on Q. The management has has been cautious on the discretionary spending, which reiterates what the other industry players also have been saying. Even the EBIT margins fell 70 bips Q on Q due to lower revenues and companies' focus on growth and investments. So stock is trading at a PE of 24 times FY25 expected earnings. While the management has guided for better revenues in Q1 FY25, we remain cautious, citing already elevated utilizations at 87%, leaving little scope for margin expansions in the coming quarters. Hence, we hold a neutral outlook for the stock. Thank you.
Apart from this, Indian Hotel reported numbers, and the numbers were marginally below expectations. The revenue grew by 17% year on year, and EBITDA margin came in at around 34% versus expectation of 36%. So marginally below number. What we are seeing that the growth in ARR was at 7% year on year, a tad below what the expectation was. And going forward, also the ARR growth may soften a bit and may not see around 7-8% growth in the coming period. Anyhow, first half is generally seasonally off for the Indian hotel, and we have a high base. So near-term outlook is neutral for Indian hotel, as the growth will be limited going forward. Apart from that, Dalmia Bharat has reported numbers, and numbers were well below expectations. Volume grew substantially by almost around 20% year on year and 29% quarter on quarter. But that there was a trade-off between high volume but lower prices, and as such, revenue increased by 10% year on year against volume growth of 19%, and that has impact on the EBITDA as well. The EBITDA per ton came in at 743 versus last quarter 1140. So substantial decline in EBITDA per ton, and this is likely to have an impact on the prices in the near term. The stock is trading at around 30 times FY25 average. So outlook for the near term remains cautious on the Dalmia Bharat. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, for the day, gold can correct till 70,500, whereby one can initiate a buy for a pullback. Prices are supportive at 70,200. So, one can expect prices to test 71,000, 71,300. Silver also, if prices are sustaining above 79,700, then one can initiate a buy with a stop loss of 79,000. And on upside again in 80,500, 81,000 is the level where profit taking is advisable. Crude, one can initiate by around 68, 70. So more likely prices are expected to consolidate from 69.70 to 68.30. So one can trade within this range. Natural gas, whereas we have seen prices are consolidating in a broad range from 138 to 150 levels. It's nearby the lower end of the area. So if 138 is holding on, then one can buy with the strict stop loss of 132. So strictly maintain a stop loss of 132. And in metal front, copper, one can buy for a pullback with a stop loss of 840. And on upside again 848, 850, one should take profits. Similarly, aluminum, one can initiate a buy around 234. So there could be a pullback till 237, whereby again selling pressure is expected. So one can sell from these levels also. And zinc also can test 248, whereby again selling pressure could be witnessed. So all in all, it could be in a range from 245 to 249. So trading in this range is recommended. That's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session in USD and R, we are expecting some sideways to bullish momentum in the range of 83.40 on the higher side and 82.20 on the lower end. One can initiate a short positions around 82.39 to 83.40 levels with a stop loss of 83.40 83.46 for the target of 83.35 and 83.32 and 83.20 levels. Thank you.